how do we manage them, and what is the new vision for banking and for finance in a completely digital world. It's not an easy vision to understand, and it's amazing when we're able to have with us one of the visionaries that is helping to build and implement that vision. And so it's a great pleasure to have for our seminar today, Diogo Mónica, a Portuguese, who has a background in engineering and entrepreneurship, but importantly is the co-founder and president of Anchorage, which is the first federally approved digital asset bank in the world, and has a vision of how finance is being transformed. And we are going to engage in a conversation with him about how that vision will unfold, and who will manage that conversation is our two faculty members, Professor Paulo Amaral, that manages our blockchain and digital transformation, digital innovation programs, and also Professor Diogo Lopes Pereira, that you have already heard from in the beginning, who directs our fintech programs. And so the format of this session will be very interactive, with a conversation started by Diogo, but then with lots of exchanges with Paulo, with Paulo and Diogo Lopes Pereira talking to him. So let me thank Diogo Mónica for being with us today. He's considered one of the Fortune 40 under 40 in finance. So one of the young people changing the world in the world of finance. So well done for your achievements so far, Diogo. And thank you for being here with us and sharing your insights and vision with us. The floor is yours, and also is Diogo and Paulo as your sidekicks in engaging in this conversation. Welcome.
Of course. Thank you so much for having me today. I really appreciate the invite, and I was excited to talk about this topic, and especially in Portugal, especially now. And as Anchorage expands onto Portugal, it's great to have these conversations and see all the evolution. I haven't been really living in Portugal for the past 10 years, so it's a very different country that I come back to every year. And in terms of technology and really this space of digital assets has been absolutely amazing to see the interest, especially after the announcement of this bank that I've been receiving inbound from the Portuguese community. So I was really excited to be here today. Thank you for the invite.
So thank you, Diogo. So tell us a little bit about yourself and what did you study? How did you end up in the United States? Really want to know more.
Yeah, so it's a long story medium. How I start this, because there's a little bit to it, but I was incredibly lucky in very many dimensions. One of the dimensions that I was very lucky in was the fact that my dad was in the Portuguese Navy, and he was actually in the US. He went to the US to do an engineering program, and I ended up being born in California. And so that was the start of my string of good luck. Primarily because I have an American passport and I have double nationality. But really, I left the US when I was 3. And so I grew up in Portugal. Culturally, I'm 100% Portuguese. And I was lucky enough to go to have an amazing childhood and be interested in the topics of internet security. And I went to Técnico. I did my bachelor's, my master's, and my PhD. We were just, Paulo and I were just talking about distributed systems. Paulo also is a PhD in distributed systems. So we were just catching up on all the things that have happened. And honestly, talking about we are that 12 years ago, my PhD was absolutely useless and it was an academic pursuit. And somehow 12 years later, there's this whole area called blockchain that is just distributed systems at its core. And in fact, I was publishing academic papers while at Técnico in the area of Hashcash, which is the mining mechanism that Bitcoin uses for proof of work. So just the coincidence of having worked on something that now has so much applicability, and now that is worth, it's created a space that is over $1 trillion. American trillion. Of course, I'm always going to use American numbers. I don't actually remember what the transformations or translations are these days. So I won't be using feet or Fahrenheit, but I'll definitely use the American metrics for dollars and numbers there. And so after my PhD, and the way that actually I got to the US in itself was also interesting. I was in 2010, I was presenting at a conference in San Jose, California, and there were people from Facebook and Google in the audience, and I was talking about network security at the time, and they came at the conference and effectively invited me, why don't you come a few months out of your PhD to work in our teams? And, it was intriguing at the time. Everybody knew those brands, especially 10 years ago, 11 years ago. Those brands were very much, the brands that everybody wanted to work for. And so I started the interview process, and it was really at the end of that interview process, when confronted with the decision of whether I wanted to work at Google and Facebook, that I ended up making a decision that candidly changed my trajectory of my career completely. And that decision was the decision around, I did not want to be a drop in an ocean of security people or an ocean of people working in engineering teams at Facebook and Google. Though both those companies already had tens of thousands or thousands of employees, and I really was looking for what I now describe as, having an increase in second derivative and always going for knowledge and being uncomfortable in learning, always focusing on growth, the growth of the second derivative of personal growth. And that was definitely going to be done if I joined something a lot smaller than Google or Facebook. So that's how I actually ended up going to Square. Mm-hmm. Square is not very known in Portugal or in Europe, but in the United States, it's a pretty known company. It is worth $100 billion today in the public market. It moves hundreds of billions of dollars on a yearly basis of gross payment volume. It is a company that was founded by Jack Dorsey, the founder of Twitter. So he's one of those rare CEOs that has two publicly traded companies, not just one. I don't know how he does it. I barely have time to run one company. So it's magical, the things that he does. But at the time when I applied, Square was 30 people. I knew I was going to work on everything from hardware security to integration with Visa and MasterCard to integration with payment systems. There was nothing that I was not going to touch. Regulation, clarity. So it was fascinating to join as employee 40 and then go from 40 people to 1,000 people. Go from a Series A company to a publicly traded company, help in that process, see that end to end. And that was over 4 years. So I led the platform security team at Square for 4 years and got to see and learn, quite a bit. And then my career took me to a company called Docker. After Square, one of the things that I really wanted to do was I wanted to contribute to infrastructure, security infrastructure, but for everyone. At Square, everything that I built was only ever going to be used by Square. And at Docker today is a piece of infrastructure that gets used on over half of the internet. There's no IT system, cloud system that does not use Docker and containers somewhere in the infrastructure. And so I led the security team at Docker for 3 years, really looking for that experience in open source, looking for that experience in that impact in the world at large. And then that leads me to Anchorage. The way that this company ended up coming together was pretty interesting. In 2017, early 2017, late 2016, there was a run-up in prices of Ethereum and these other cryptocurrencies. And there was one particular client that, because I had been working in private keys and security for all my career, they reached out to me asking for help. And what they had done was they had lost the passphrase to a $1.5 million Bitcoin wallet and were offering me 20% if I could break into it. So that was my introduction to the whole business. The very sophisticated investor that does not know enough about technical security and operational security to even keep their keys safe. And so at that point, it was immediately obvious that there was a business here. But candidly, it took me quite a few months until I realized that there was an independent business. And so I started doing consulting until I didn't have enough time in my day and I had a full-time job. And that's really where the core idea of building a platform and building a banking infrastructure that came from actual client interest. And so 3 years later, as was said, we are the first federally chartered crypto bank in the United States. We have billions of dollars in assets under custody. We have moved on chain tens of billions of dollars of assets. It's a very fast growing company and obviously grows with crypto. And crypto has been very popular lately, which is fantastic because our revenue is directly tied to the price of crypto. So that's also been fantastic from a revenue perspective for the company itself. And we're growing really fast. We now have, offices, including in Portugal. During the pandemic, we opened an office in Porto, right now focused on primarily engineering product, but expanding pretty quickly. This year, we're going to double in size, if not triple in size in Portugal. And also I feel great, as a Portuguese person coming back to the country and now creating a base here. And obviously I get to spend a lot more time.
And was it very hard?
That's the long story in medium.
Yeah. And was it very hard to start a bank, to raise the capital, to move investors to really believe in crypto banking?
So no, not at all, not at all. And I think the reasons as to why it was easy, it was because, as you all know, venture capitalists really work on pattern matching, let's say. And so there's a pattern match of the type of entrepreneur that you want to fund. That's it. That's 90% of the decision is, does this look like an entrepreneur that has succeeded in the past? And I, again, on my breadcrumb of being lucky life, another breadcrumb is the fact that I was at Square, which was an incredibly successful startup that generated, hundreds of billions of dollars of wealth towards these VCs. And I was a very early employee. I led the security team. And so that brand followed me to Docker, that then really compounded on that brand and allowed me to just walk into an Andreessen Horowitz or a Sequoia or one of these major venture capitalists. And I raised $17 million with a slide deck. I literally only had a slide deck. I had a slide deck. I had my co-founder, Nathan, and I had been working for 7 years at that point. And I went into these VC firms and said, hey, here's the slide deck. Here's an idea. Mm-hmm. In fact, I think a funny story is I had to incorporate a company because they wanted me to wire money and I didn't have a company incorporated to open a bank account. So the money came first. The company came second, and the bank account came third to receive the money. And so, it's interesting when you're
the dream of
an
entrepreneur, right? A dream of
that's
an
right. That's right.
Receive the money.
And by all means, it's not everyone's experience. And so that's why I'm saying that I'm really lucky, because the pattern match fits two security engineers working in their field that is a completely new field and it's poised for growth. Very strong believers. Our first leads were Andreessen Horowitz, which are known, Mark Andreessen created the first browser. And they're known for all of these adventures and actually being very forward-facing and forward-thinking.
Well, I would say that you are being very humble, because Andreessen Horowitz is one of the best venture capitals in the world, and they really invest very well. So it's not only luck, for sure. And you have recently done another round, right? With again with them, also with the Portuguese, the biggest one, venture capital, Indico, and so fantastic. So in terms of your vision for banking, for crypto banking, yeah.
So let me intervene. We are all, but first, thank you, and you really sound like an American, but I'm so happy to see Portuguese in front of innovation in that side of the Atlantic. We are all curious about, first, what is your business model? Come on, what are you selling? We want to understand the success and why is it so important? So tell us about the business model.
Yeah, it's a beautiful business model, and it's actually very tied to the traditional institutional banking. So we charge a percentage in dollars of every Bitcoin or Ethereum that is on the platform. So that's the base business model. It is a custody fee business model. We charge X% of every single cryptocurrency that is deposited on our platform. And we have many, many billions of dollars of cryptocurrencies worth on our platform. So that's the base. But really, Anchorage right now is a platform. It's no longer just about custody. We are a bank that has a platform that provides many services that other institutions can use to build products. So we don't actually serve retail. We don't serve you and I. So Paul, Diogo, myself, we can't open directly an account on Anchorage. We have to be an institution. We can be a family office, but really clients like Visa is a client of Anchorage. Andreessen Horowitz is also a client of Anchorage. So very large institutions that have many billions of dollars to actually invest and want to build products. And so custody is charged on an assets under custody on a yearly basis, but we also do trading. So we buy and sell for our clients, which works exactly like traditional brokerage businesses, where we actually take a cut of every single transaction. We also do lending. And so you can borrow fiat, so you can borrow euros or dollars, and as collateral, you post Bitcoin or you post Ethereum. So that's another part of our financing business. We can actually give you margin, or we can offer you loans backed by crypto collateral. Or even you have $100 million worth of Bitcoin and you want to generate yield on it. So you want to actually have return instead of having it sit there. We have lending pools, and we lend it out and borrow it out and find borrowers for it and find lenders for it and generate yield on your Bitcoin. And so if you think about institutional banking, in general on the traditional market, you can apply all those business models to the crypto world. The fundamental difference is that the technology that you need to offer these businesses is 100% different. It's completely 180 different from the traditional world because of the way that the blockchain works, because these assets are completely irrecoverable. Once Bitcoin moves, there's no clawback. There's no, calling the other bank and asking pretty please to money. That's all you have. There's no judge that can return the fees. There's no database to update when it's gone. And so the assets that you need to build, and my background is in security, the security aspects that you need to build to actually have billions and tens of billions of dollars on a platform are just fundamentally different. And this is why the current very large banks can't really compete with Anchorage. And they're all coming to Anchorage to partner, to use our technology, because it's just something that is very hard to build.
Tell me something. So you secure, there's no chance someone hacks your Anchorage or that you lose the password. So how do you ensure your institutional clients that their money is going to be there and it's safe?
Yeah, so three main portions of that. The first one is technology. The second one is insurance, traditional insurance. Okay. And the third one is regulation. So part of being the first bank also means that we're the first ones to pass the very high bar for banking in the United States. And that means we're constantly audited, our accounts are audited, our technology is audited, so on and so forth. So there's a very high bar for scrutinizing our own business. So that's one piece. The other piece is insurance, where we have insurance by Aon in Lloyd's of London. They are the largest insurance underwriters in the world. And so they looked at our technology, they created a model of loss of our technology, and then concluded that the risk is X. And so we have insurance for our own technology. And so if you're a client of Anchorage, you know that you have an insurance policy to back it in case anything goes wrong. And then finally, and the most important piece really is the safety that technology provides. And here you just have, it's a risk-based approach. You always put multiple layers. There's no one layer of security to rely on. And so constantly we're adding, and security is never a finished product. It really is a process and it's an ongoing thing. The security model that we build for $10 billion, it's not the same security model we'll have for $100 billion. And this is why crypto commands such a high price compared to traditional banking, because I need to build security as the prices go up. So as Bitcoin has gone up, so have my costs in security. And it's not like traditional banking where it doesn't really matter that the database has €1 or the database has €10. It ends up being the same. It's the same database. It's just a number on some database row. For Anchorage, it's very different. The type of investment that an attacker, like a nation state attacker, is willing to invest to hack Anchorage is very different at $10 billion than it is at $100 billion.
Yeah. Tell me one thing. So you're a bank, there are loans, and as far as I know, regulators say that you need reserves, right? Now, your assets are in cryptocurrency, and this is very interesting. Do they accept that you have these reserves in cryptocurrency? And is it 1-to-1? Is it 1-to-10? How does it work?
Yeah, so one thing that we have to talk about is that crypto banking today does not work like traditional banking. When you make a deposit of Bitcoin onto Anchorage, you own that Bitcoin. That Bitcoin is yours. In fact, you can track it on chain. Anchorage cannot move it without you. And so I can't do the same business model as a traditional bank does and take the deposits and loan them out without your approval and make money on it. And so, in your bank and your personal banking today, your bank account says you have, say 10,000 euros, but you don't have those 10,000 euros, right? Those 10,000 euros are applied somewhere else. In crypto banking, and specifically institutional crypto banking, that's not the case. Your crypto is there, it's on chain, it's yours. We cannot touch it and we can't use it unless you explicitly opt into a loan program where then we discuss what the yield is. And so you have to opt into that program. So in that case, there's no need for reserve because all the client's deposits are there. And they're just there. And even though they're there, we do have reserves, but we have reserves for business continuity, for orderly shutdown, for any kind of extraordinary events, not necessarily reserves to back the assets because the assets are there. If you want your Bitcoin is always there. There's never danger of a run on the bank because all the assets are there. So they are technically backed 1-to-1 because we're not actually doing anything with them.
It's backed 1-to-1. And when you buy Bitcoin, when you buy cryptocurrency, you go to exchanges. You are not an exchange yourself.
Correct. We actually go to market makers, not exchanges. The traditional world has a different model than the crypto world. In the crypto world, there's a lot more fragmentation of where liquidity is, and you have to go into many places to actually do large orders. And the liquidity is primarily still on market makers, not really on exchanges, at least in the United States. And so what we do is we have a brokerage, a trading service that connects to all the liquidity providers and gives you, the client, the best price. So whenever you say buy $100 million of Bitcoin, we go out to the market and get you the best quote. And then you get to decide whether you want to execute that quote or not.
Yeah, but that quote, then it's executed in an exchange, right?
It's not executed in exchange. It's executed directly to the market makers. So as RFQ, the majority of the liquidity is still on, over-the-counter trading, so to speak. Electronic, but over-the-counter. So not necessarily executed on exchanges, but it can be executed on exchanges too.
Okay. And do you think it will be possible to, or do you, do you believe, or do you want to come to Europe?
Yes, absolutely. One thing that I'll point out as a detail is that Anchorage already operates internationally. We have clients in Europe, we have clients in South America, we have clients in Asia. And obviously the majority of the clients are in the US. One thing that we've found is that people want to be regulated under the bank in the United States. They trust regulatory regime. In fact, all the other regulators internationally usually look up to the OCC and the SEC in the United States to really decide the type of regulation that they themselves use in their own countries. And so the reality is that clients love being regulated within the United States. And so they come to us and want to use the American bank. That doesn't mean that in the future, we won't have other types of regulation and other types of banks. And we do have very many subtypes of institutions to operate in different types of businesses. In Europe, that might happen in the future for us to have a specific regulatory clarity that allows us to operate, say, in Germany or in other countries like that. But for now, we see the client coming to Anchorage because they want to be regulated in the only federally chartered crypto bank.
What types of services can an European bank buy from you right now? Because I believe that maybe not everything, because some things will be regulated, like having assets that are on your, that are in the United States. Well, how does it work? What do you sell to Europe that is different from what you can sell in the States, which is everything that you offer right now?
Yeah, there's really no difference, but it really depends on a country by country basis. Obviously, there's things like GDPR to care about, and there are other types of regulations that you have to meet. But in general, we always find a way for the clients to, it's no different from a client in Portugal. Can a client in Portugal use an international bank? Can they create an account in an international bank and do brokerage in an international bank? The answer is yes, they can, right? There's no regulatory regime in Portugal that denies them the ability to do so. Same for Anchorage. We are just a bank. The fact that the bank operates in cryptocurrencies is somewhat irrelevant in this case. And, massive asterisk here. There are definitely like details that we have to figure out, and countries have like a specific country by country regulation. But by and large, they can just open an account today in Europe and come to Anchorage, do custody, do brokerage, do lending, all these other businesses.
There's a question here on the chat that it's appropriate for right now. So basically, just to confirm, you only work with institutions, right? You don't work with high income or wealthy individuals?
We do.
Oh, you do.
Usually, individuals, what is happening is themselves are an institution. When I say institution, what I mean is non-natural persons. So it can't be Diogo Mónica, the individual. It has to be Diogo Mónica's fund or Diogo Mónica's LLC. So as long as you are a non-natural person, we work with you. But maybe let me take a step back and talk to you a little bit about the vision of Anchorage and why we are institutional only. Crypto is new. Bitcoin exists for the past 12, 13 years, but crypto itself as a mature or more mature industry is relatively new. And in fact, the institutions have really been coming into this space in the past 3 years, partly because there were no banks, no institutional banks to actually allow them to come into this space. So it's very early still in the industry. And the space that we found is we are here to allow companies to build products in crypto. The thing that will bring mass adoption will be institutions actually building products in crypto. Like PayPal. PayPal offers buy and sell of Bitcoin in their Venmo app. Square Cash offers buy and sell of Bitcoin in their Square Cash app. We have seen Robinhood adding cryptocurrencies buy and sell. So we want all of these, we've seen Revolut, we've seen all of these other companies add this. We want all these companies that already have consumer relationships to be able to support this ecosystem. That's what we're here to do. We're here to allow participate in crypto. It is not our goal to go directly to consumer. The dream Anchorage is to have crypto as an alternative financial system, not as a replacement of the traditional financial system, but as an alternative. And why do we need an alternative? Because we need competition. The financial system has not seen competition for a very long time. In fact, if you see the US structure, BNY Mellon was a bank that was actually invested by Alexander Hamilton. It's over 300 years and it still exists. It's still one of the massive custodians in the United States. What other industry do we know that has had a player that has been dominant for 300 years? There's no other industries in which there's been a dominant player. And so what we're seeing now is we're seeing crypto going after 1 billion people that are either banked or underbanked, that the traditional financial system is just ignored, largely ignored. It is not interested in dealing with them. It's not interested in onboarding them or dealing with the pain that it is. And crypto is going after that. And by going after that means that there's competition. And by having competition, all of us benefit. That is the goal of Anchorage, is to allow that competition to exist. Because companies 3 years ago could not build products in crypto. And with Anchorage, now they can.
And how do you see big companies like Tesla or MicroStrategy having some part of their treasury in cryptocurrency? Is this a trend that will continue and increase?
Yes. And I mean, I'm telling you this because I see all those clients come to us, right? Many of them are coming to Anchorage because Anchorage is the company that buys the Bitcoin for them, and Anchorage is the company that keeps the Bitcoin for them. So where we're seeing quite a few of them come in that are either private companies and so don't have to announce it publicly, or that are companies that at some point will announce their actual Bitcoin purchases out on the market. So that's very much happening. And if you think about it, it makes a lot of sense. Bitcoin has won this narrative of store of value. And it's been the best performing asset every year for the past 11 years. At some point, you have to stop being, you have to stop a little bit and look at yourself and say, hey, why do I have 100% of my treasury in cash that is being diluted? And, over 30% of all the dollars in circulation were printed in 2020. How insane is that statistic? And so you are clearly seeing signs of inflationary pressure in the money that you have in your bank account. And why wouldn't you allocate a small percentage of it to when it's proven itself to be reliable, to been around for 13 years, and to actually be uncorrelated with the rest of the market, and actually seems to actually work as a cap preservation narrative. And so, of course, all of the treasuries will do this at some point. And I have no doubt that this will be a trend that will continue happening.
And do you see your project with Visa, and maybe you can explain a little bit more your project with Visa, as a way to democratize the use of cryptocurrencies as a mean of payment?
Yes, absolutely. And maybe before I answer that, we talked about fundraising. So we have done 3 rounds. Series A was led by Andreessen Horowitz. The Series B was co-led by Visa and Blockchain Capital. So Visa is also one of our largest investors. And then the Series C was led by the government of the Sovereign Wealth Fund of Singapore, GIC, which is one of the best and largest investors in VC in the Valley. They're one of the Valley's worst kept secrets. So we're very excited about that partnership. And to answer your question, Visa's partnership is very interesting because Visa's partnership is Anchorage not just doing B2B, but doing B to B to B2C. So at some point, this will get to clients, and I'll describe it more accurately. What is happening is the following. Visa wants to expand the businesses. And they have several partnerships with Anchorage, out of which only this one is public. But the Visa crypto APIs allow any kind of fintech to add support for cryptocurrencies on their apps. So if you're a bank or you are a fintech and you want to add Bitcoin buy and sell, Visa has these APIs that are already ready for you to integrate with an entity that you're already on board with, because if you're a bank, you're probably already already have credentials, and you're probably already a player, a partner of Visa. So now through their APIs, you can actually add Bitcoin buy and sell and custody and all of it automated for you. But where does Visa get the technology? And the answer is Anchorage. So Anchorage really is the backing for all of it. Anchorage does all of the crypto, does all of the buying, all of the selling, all of the custody, all of the pricing, all of the reporting. Everything is done by Anchorage. And Visa is creating a new business in a new area by using Anchorage capability. So that's what's happening there with that partnership. And when I say that the vision of Anchorage is to allow institutions to build products, this is exactly what I mean. Visa could not build this product before, and now it can. And now, lo and behold, we have one of the largest companies in the world offering crypto services to other institutions. And so that's the beauty of Anchorage, is the fact that we are allowing institutions to build products, and those will permeate eventually to retail, but will also permeate to other institutions themselves. And I think it's also worth to point out that, that's my background. I have never been a consumer product person. At Square, I was doing security on the back end. Nobody ever heard of me, but I was protecting, billions of credit cards. At Docker, nobody has ever heard of me except the developers. Yet, all of your payments and all of the internet right now runs on this thing. So I've always been the person that is on the back that really takes pleasure from the amounts of dollars that are coming through the infrastructure and the security of the infrastructure. That's what I like building. I like building, and I really enjoy this B2B space where I'm building fundamental technology. And right now I'm building payment rails. I'm building money rails. Anchorage is actually one of the founding partners of Diem, former known as Libra, right? The partnership that is creating a new cryptocurrency, Diem, that is backed by Facebook and Uber and Lyft and Shopify and even Farfetch, which obviously is Portuguese. And so there's all these companies that came together to build this new cryptocurrency called Diem, which is bound to launch this year. And even that is kind of cool to participate in the creation of these new rails, backed not by banks, but backed by corporates. And so all these things are things that I just, love doing.
Diogo, I have to ask this. You talked about alternate finance somehow, and yet you are regulated and you are offering your services to banks and to Visa, which is mainly what we have. So they will evolve, but they will evolve not trying to kill their own business models, as you know. Now, what about big techs? Why don't you? Well, this is the question. Why don't you? Google or Amazon. Why don't you pick up all these capabilities and say, you are Amazon, you can use this and provide yourself the retail that I'm not interested to, and suddenly become the real alternate to traditional banks, even Visa.
You're absolutely spot on. That is happening. That is happening. So right now, if you want to create a financial product, imagine that you, Paulo, decide to build a startup. And what you want to do is the following. You want to build the type of relationship and services that banks provide to retail. So you want to take in deposits. You want to issue a credit card or a debit card that allows people to pay. We want to build in a savings account. And let's say that these are the three basic products that we want to give. With cryptocurrencies, you can do that without touching the traditional finance world. For deposits, you can use stablecoins. For savings, you can use Bitcoin or other stores of values. And for payments, you can actually have a Visa credential backed by Bitcoin or backed by your crypto stablecoins. This is happening right now. There are applications out there like Echo and other wallets launching that are literally banks outside of the banking infrastructure. Now, for those to work, you need at some point a translator between the fiat world and the crypto world. You need a regulated entity that joins these two things. And that's what Anchorage is. Anchorage is allowing to give you the minimal interface that you can of the traditional world. And so the other way to look at this is we need an embrace and extend strategy. We are not here to kill the traditional world. That will never happen. These two will always coexist. I don't know which percentage of business will happen on either, but they will all have their niches. And Anchorage is kind of the bridge between the traditional banking, has the regulation, has the actual oversight, and provides the technology for crypto. So this is actually the bridge that we needed so that you can build an app without ever touching the financial system. You are not beholden to T+2. You are not beholden to having a bank account with a large bank. You are not beholden to their fees, to wire fees, to like 48-hour transfers, to exploitative Forex, to random percentages, none of that. Just building your business. You are integrating with blockchains and you're just doing your business. And the only thing you know is that at some point your deposits are in a qualified custodian and a financial institution like Anchorage that is qualified, that is within the regular world, that is oversight. But your clients don't need to know that, and you don't need to know that.
Yeah. So, but if one day everybody is using a wallet in mobile phones, you don't need to translate to fiat anymore. Right?
That's exactly right. And that's the beauty of this. Once you start having people use the phone, why does it matter that it's a database entry versus a blockchain entry? It doesn't. Yeah. And by the way, the Visa credentials are the most interesting thing. Today, you could actually spend your cryptocurrencies by just using a Visa card on 70 million merchants. So you can go around the whole world, pay with Visa, and never actually have $1 or €1. You can only have Bitcoin and USDC or Bitcoin and DM or whatever you want. You can already do this today, but it's at the edge. The reality is that people are still not used to paying with their phones, even though it's definitely going to be the future. And the reality is that people still feel like somewhat attached to this concept of like, every time I have this conversation with people, it's kind of interesting. People know that we're off the gold standard and we've been off the gold standard for like dozens and dozens of years, but they have this weird concept in their mind that somehow the bank still has one banknote or one gold bar that is the equivalent of the deposits that I have with them. And so they haven't translated this, this world of like, fiat is not backed by anything, the same way that crypto is not backed by anything. And so it's kind of fascinating, but we're seeing those worlds merge. And you're absolutely right. The more fintechs provide an app, why does it matter that it says euro instead of, US or USD versus USDC? Why does it matter that it's on the blockchain and it's a cryptocurrency or it's a USD? For you, it barely matters. We can talk about insurance and we can talk about the backing of the actual central bank around the fiat rails, and that matters, of course, but matters a lot less than you'd expect for actual traditional consumers.
Yeah, but yet you said we are on the edge, and the example you gave, it's possible because Visa has all these millions of TPAs and gets access to the final consumer, and so we pay with bitcoins, but we still have to have the exchange to fiat, and there are fees. Now, if everybody starts using mobile phones and those merchants have their own wallets, you don't need that anymore. So there are risks for the infrastructure. I'm just saying there are risks. But it's on track, right?
Yeah, 100%. And by the way, I have to say that Anchorage is that problem. Anchorage is actually integrating with the card networks such that you never have to touch fiat. Or when you have to touch fiat, it's Anchorage that touches fiat and Anchorage that does a translation. And so there will be a day where settlements with the issuers, with the acquirers, with everyone on the card rails will be done in stablecoins. I can guarantee you it's already happening. And so we will not have to actually move to fiat. We will not be holden to T+2. We will not have a fiat custodian, and 100% of the flow from swipe to settlement with the acquirer, 100% cryptocurrencies, 100% stable coins. Maybe not Bitcoin, because Bitcoin is actually not great for that, but actual stable coins, either DM or USDC or, whatever, Celo dollar, whatever stable coin that will be used. That is already happening. We're already systematically removing every single piece of the card settlement layer and turning it into crypto. Why? Because it's so much more efficient. The transactions are there in a couple of seconds, and this intermediates a lot of the players that are just rent-seeking, that are just from a regulatory perspective have always been paid, but are not actually adding that much value.
Very good. Look, we are not going to monopolize this conversation. We are going to open to because they will kill me in the end, to me and Diogo. Diogo, do you want to read?
Yeah, I can. I think there's a question, a very interesting question that actually we discussed last week. And it's tied to this, what we were discussing, which is from Paul Villaluz. How do you see the digital euro currency, the initiative by the European Central Bank, and also the Chinese one? How do you see them?
Maybe a little bit of context. Anchorage is actually working on CBDCs just because we are the first bank, we're a bank, we have the technology. And so we're in a lot of these conversations around CBDCs. Let me just paint you a picture that compares a very wide spectrum. On one end, you have fully decentralized Bitcoin that is not reliant on anything, and it's just mining and uses proof of work. And then in the middle, you have things like DM. And then on one extreme, you have the Chinese CBDC experiment, right? Which is basically fully centralized, fully government-backed, but just, it's not a cryptocurrency by any means. It is a digital asset in the sense that it's available via API. And so this is a very big spectrum of where things can end up. And it's not clear to me on the CBDCs where they're actually going to end up. They're going to end up a lot closer to, the right side of the spectrum. So further away from Bitcoin in terms of decentralization. What I hope it's going to happen is that they end up somewhere close to what DM is, which is permissioned access, but transparent in terms of transactions and easy to participate in. And so that's what's going to happen. So what I think is there's going to be digitalization of these currencies because it just makes it easier for you to build companies on it. That's it. If you don't have to talk with anyone but the central bank to be able to transform and to create an account and transact dollars or euros or yen or whatever it is, that's going to be very beneficial for the country, because the evolution of companies, the innovation is going to be able to do there. In fact, I could actually point to one of the major advantages of Bitcoin and Ethereum is the permissionless innovation component. If I want to build a product on Ethereum on our Bitcoin, I don't have to ask anyone for permission. I just need knowledge of smart contracts. The blockchain is public, and I need, a laptop and to do half a dozen lines of code. And here I am. I'm up and running. So that's beautiful. And that's what I think is the true power of CBDC, is if we allow the permission and innovation directly to the central banks, allow the internet to only have one hop to use actual central backed currency. And then what we're going to see a merge of these things. You're going to see blockchains that are going to wrap CBDC and make it available on Ethereum. So you actually you'll be able to have digital dollar wrapped on Ethereum. And so these things are actually going to merge, even though they have very different trust components, and all of them are going to end up on the spectrum. So that's how I see these things happening. They will happen. They will be on different ends of the spectrum, and they all will wrap each other in different ways. Smart contracts wrapping CBDCs, CBDCs being issued on decentralized platforms that are backed by central banks. All of these will happen, and different countries will have a different take on it.
Right. Another question from Victor Zabo is regarding the Tesla purchase of Bitcoin. So how long do you think it took to buy such a big amount, because the market is not very liquid? And the other question is, how do you keep your customers satisfied? Because probably there's a huge spread in these transactions.
Actually, that was true 3 years ago. Right now, $1 billion purchase is actually not a big deal. And we've seen a massive evolution, but $1 billion purchase can be done, in under a week, if you're being very conservative. So especially if you're not going on the exchanges, as I mentioned in the beginning of this conversation. You're not running through the order books. You're actually just connecting directly to the market makers, which actually have quite significant liquidity. And every day they have more liquidity. So we've actually been able to get really, really tight spreads for our clients, and the spreads are getting tighter on a daily basis. And so for us, we actually are working on agent-based. We're not taking the market risk, and we're not taking a position against our clients. We're just getting them the best price. And it's been very easy for us to deploy. And we've done purchases that are that big. Obviously, we just divide them in chunks and we operate them over the several days, but it doesn't take longer than an actual week to make a purchase of that size. And it's reducing on a daily basis.
And an interesting question from Jigar Govind is if in the future you'll be allowed to build ETFs in cryptos or do swaps in cryptos, or maybe even if you can support CIB of large banks, so institutional banking of large banks, to provide these to institutional clients?
So the answer is yes to all of the above. The reason why they don't exist yet is because they're all path dependent on one another. You needed a bank to be able to have an ETF, because you need a qualified custodian, you need a stamp of approval from a regulatory perspective to be able to build it. And you need liquidity. So the question that we just asked, 3 years ago, we didn't have liquidity. Now we have enough liquidity to show, best execution, whatever that means, best execution with major air quotes, but you can show regulators that you have best execution, and you can actually get liquidity to the market. And this is not a systemic risk. And then finally, you have the right regulatory structures and the right technology that has already been in market for years, right? Once you have a custodian or a platform that has moved tens of billions of dollars on chain and has been around for years and has gone through, SOC 1 and all these approvals and has insurance, that all the checkboxes are ticked. That would be the same checkboxes you'd have in the traditional world. And so all of a sudden the ETF becomes possible. All of these other instruments become possible. The only thing that I would actually add to it is that even though they're possible, it's going to be interesting if DeFi ends up winning today, because DeFi is where a lot of the innovation is happening. Not only the traditional market or the traditional market instruments, financial instruments, are being replicated in decentralized smart contracts, but we're actually creating financial instruments that we couldn't create in the centralized markets. Things like flash loans are just not possible in the traditional world. An atomic loan, a loan that operates within the same transaction, and it's effectively riskless. So you start a transaction and you know that either all of it executes or it doesn't, and you get a loan, you do something with it, and you return the loan and you make money at the end. And either the whole thing happens or nothing happens. So there's no risk in between. You're taking smart contract risk, but there's things like that you can do in blockchains and decentralized finance that you just can't do in the centralized world. So that's actually the exciting thing, is that there are new building blocks, instruments that are being built on contract blockchains that can't do on the traditional world. So that's actually the most interesting part. All the rest will happen.
But it's really interesting. But and you explained quite well the vision there. When you have custodians, you can use actual regulations to build on it, and now you have it. You have the liquidity, and you have the mechanisms, and you are the first. That's why it's so exciting to see Anchorage doing this job. But DeFi, it's another world because they work at ecosystem level, without custodians. So we don't have regulations for that, right?
We don't have clear regulations for that, but I would just point out that they are decentralized, but that doesn't mean that your interaction with them has to be decentralized. So just to talk about specifically, a client can come to Anchorage, for example, and do governance voting. So use DeFi to vote on the outcome. This is one of the services that we support. Sort of like there's proxy voting in the traditional world, in the equities world, we can also do proxy voting in DeFi. And that's a decentralized interaction, but that's being done through your bank, through Anchorage. And so even then you are interacting from a regulated platform into a decentralized world. Okay. So those connections can always happen.
I understand, yes, no, but coming back to custodian and having decentralized with someone taking that in charge to have the current regulations working doesn't solve the issue, because the real interesting was what you were saying. It has to be somehow distributed or really decentralized, having various parties. And once again, we don't have regulations for that. But that can be an issue for another discussion, because it can become complex. But that is where we will have it. That's my opinion. We'll have the major gain of all this. Not replication.
100% agreed. And by the way, I will further your point by saying that it's been obvious very quickly that a lot of the liquidity is happening on decentralized exchanges, and a lot of the liquidity around loans and yield generation is happening on chain. The yield farming, all the exciting stuff is happening in decentralized world, for which we don't have clear regulatory clarity. And by the way, Anchorage is constantly pushing the edge, staking. We allow people to do staking. Staking is in itself a concept that is weird for the regulators and has never existed in the past, and we can do it. And so constantly we're pushing the boundaries and edges, but part of it is also we have to build trust. And so this banking charter allows us to build trust with the regulators. Even more years of operation without anything going wrong will allow us to have more trust that will then allow us to get more of these businesses. So this is always a trust building exercise with the regulators too.
That's why we need you in Europe, my friend.
Well, the good news is that we have an office in Portugal, and we're expanding, and we're doubling or tripling the team. So that's exciting news.
I agree.
We have another question here from Davor Sanchevic. We have several questions that probably won't be able to answer all of them, which is regarding the Coinbase IPO. So do you think more crypto platforms will follow the leads? And maybe even Anchorage can possibly go public in the future?
Well, let me answer that with everybody's watching it for sure, because there's a lot of questions on how the market is going to price it. If you think about a public company, usually people go public when they have very strong quarter by quarter predictability of their business model. How can you run a company with predictability when you're in crypto and the prices go down 80% or up 50%? The answer is it's very hard when your business model is straight tied to the actual values of price. And so we're all expectingly looking forward to the market pricing these and making a judgment call on how these things actually are going to go operate. The other things that I want to say is Anchorage is and wants to be an independent company. We have a very strong model and a very strong business that allows us to be an independent company, number one, and very strong growth rates that allows us to be an independent company. And at some point, if the public market is the place where it has the cheapest capital that I can actually tap into to grow the company faster, then that will be something that we'll do. As an anecdote, I have, one SPAC reaching out to me every other day. So all the SPACs are reaching out, everybody's reaching out. It's very exciting right now to bring companies public. But for Anchorage, there's not a lot of benefit today. We don't need the capital. We're growing fast. We have more capital than we need. And so maybe at some point in the future, but our goal is very much to go that path because we want to be an independent company.
Yes. So another question from Zoran Gizabrich. So the crypto market seems to be very cyclic, in particular related to Bitcoin halving cycles. So do you see risks for the coming 1 to 2 years to have a temporary 80% pullback, as you say, which may discourage traditional firms? It's very
So
difficult
what
to
I've been
predict, yeah.
seeing, I mean, it's an excellent question. Look, I can't predict a price. The best thing for Anchorage is for the prices to be right, for there to be liquidity, for there to be regulation, and for the companies that are very large companies to come into the space. Because those are, the diamond hands, so to speak, using traditional, more colloquial lingo from Reddit. They are the people that are actually here for the long term. They're investing in the space and they're investing for the long term. In 2017, the run-up was primarily retail. Retail was buying into the euphoria with the goal of making a quick buck and actually just trading this and selling it at the top, buying at the bottom, selling it at the top. The institutions that I'm talking to have a very long-term horizon. So if anything, I would actually expect the volatility to come down because the supply that is being purchased nowadays, primarily by institutions, it's unlikely to move in the next few years. They're not going to be price sensitive. Even if there's an 80% pullback or a 50% pullback, it doesn't really matter because their time horizon is 10 years. And they're taking very small positions out of their treasuries and balance sheets, right? We're talking about like 1% positions, 5% positions max. And so it's still very early into the publicly traded companies taking positions of their treasury into crypto, but that will actually allow us to have a less volatile market and a market with more liquidity too.
Mm-hmm. Well, another question that actually Paulo Morales is studying a lot, but so in the future, do you think it's possible to buy and sell houses around the world with cryptos? And of course, Paulo Morales is studying the possibility of having digital titles of property. But so of course,
the answer,
of course, yeah.
The answer is yes, right? Now, if the question is, does it get translated to fiat before, and there's a hop there or not, you can just trade it. And a lot of these transactions can be done by just trading Bitcoin at the price of. Now, what I would say is that the right question is unlikely to be whether Bitcoin will be used as a mechanism of payment. Mm-hmm. Maybe Lightning Network succeeds, and we do have a mechanism for payments and fast payments and transactions. But I do think that to answer that question, in crypto, we should look at stablecoins. Will things be purchased with stablecoins? And the answer will be absolutely yes. Will houses be bought with stablecoins? The answer will be absolutely yes. But those are effectively digital equivalents of central banked, so actual fiat currencies. But it will happen. We will have transactions that will be completely on chain, and we'll have people exchanging everything, including houses, completely on chain. And now, whether the digital ownership will actually be registered on the blockchain and will be public, knowing the US market, I hope that's the case, because in the US, it's an absolute mess. Ownership of property is just an absolute mess. And anything that provides more transparency and provides more liquidity to it is very, very welcome.
Mm-hmm. Definitely. There's a question here that I don't know if you can answer or not, is if you have a target price for Bitcoin and Ethereum for the horizon of 2025 to 2030. It is like the hardest question of all.
Yeah, the price is the moon, right? That's what people are saying the price is. So we really don't care about the price. Honestly, we just care about the right price for there to be price discovery. That's what we care about. Over the long run, we're strong believers. I would not be running a business that literally makes money when Bitcoin goes up and makes less money when Bitcoin goes down if I didn't believe Bitcoin was going to go up, and if I didn't believe Ethereum was going to go up, and if I didn't believe crypto was here to stay. We are very big believers, and part of crypto being here to stay is us building infrastructure so crypto actually gets to stay. Mm-hmm. And so that's more what we're focusing on, the building component. The price fluctuation, it's fun to look at, especially when it's going up, but it's not something that we are super concerned about.
Well, we are wrapping at the end of our conference. I don't know, Paul, would you like to ask a question?
Something. We have been talking about crypto and all this, but there is much more to that technology than just crypto. Crypto is important because that's the value, and without value, it's very difficult to do everything else. So there are a number of things happening. They are still disconnected because we didn't have an Anchorage and we didn't have this connection. It's true, because the relationship with traditional world, otherwise we would have completely separated ecosystems that almost impossible to handle because housing, whatever. So yeah, we also have to think about the other things and how to bring this crypto world to the rest of the economy. And that's what I have been studying, but that should be a theme for another discussion. Thank you, Diogo.
Of course.
So thank you very much, Diogo. I'm going to share, so for the people that are interested in these teams, Católica has a lot of programs that, sorry, let me just try to share this in more convenient way. So we have a blockchain program for the people that are interested on it, a blockchain program in partnership with Technic, where Paulo Amaral is a coordinator, and so everyone that has the passion and wants to know more about blockchain and smart contracts, you can still apply to it. It will start on the 23rd of March. And then we have a fintech program that gives a more broader view of what is happening in fintech in the world, of course, and in Portugal in these various areas. So crowd lending, credit in point of sale, crowd equity, investment management, and of course, blockchain too. And so this program will start on the 18th of May. So and you can apply. I will try to put the links on the chat afterwards. And we have several conferences that I'll let Flip present. Flip.
Very good. Thank you. So first, let me just make a quick comment. A big thank you to Diogo for his inspirational vision of what digital banking can become. Just a word I didn't mention to you when we were discussing before the seminar. I spent 5 years, I'm a professor of entrepreneurship, and I spent 5 years in Silicon Valley studying technology visionary entrepreneurs that were building new markets. And after what I heard today, I'm not at all surprised that you got 50 million euros on the back of a slide deck, because you are the consummate visionary technology entrepreneur that know what you're doing, that are very convincing, very compelling, and has developed what can become a new market and in fact a new industry. And the strategy that I found that these entrepreneurs follow is that they find strong partnerships among the established players to gain credibility, players that they will eventually make obsolete as they become increasingly successful in realizing their vision. So I think you are doing, I have to confess that I'm slightly crypto skeptic, but I am nowadays Anchorage fan after hearing you. So wonderful work that you are doing, amazing. Thank you very much for being with us and giving us your inspirational vision about the crypto world that you are helping to build, Diogo.
Thank you so much, Philippe. And I love the sentence, crypto skeptic, Anchorage fan.
So as Diogo Lopes Pereira mentioned, and thank you to Paulo and Diogo for leading these areas of knowledge in Católica and organizing this great seminar. We have a great lineup of seminars for March. Next week, we have a seminar on interpersonal communication in challenging times with Carla Rocha, who is a well-known communicator, a radio host, and João Matos, our professor of negotiations and communication, and Teresa Oliveira, leadership coach. So it will be a great seminar on how one can best communicate in a time and manage people and lead people in a time when we have Zoom rectangles to deal with. So I think everyone will be able to engage with this session and find some learnings in terms of what they should do next. The week after, 25th of March, we are discussing what we can expect from the recovery in the industries that made the Portuguese strong in the last 5 years, the tourism, service, wine, food, luxury areas. What can we expect? What are some of the recovery plans? What are the leaders in this industry doing and planning for the deconfinement and the months to come? We'll have Patricia Dias from Chefs Agency, a marketing agency for chefs and restaurants, Mónica Mendes, who leads our luxury management program at Católica, and it will be a great seminar. At the end of March, we have the launch of a new initiative, which is our platform for internationalization, led by our professor Miguel Tid Marques and Dr. Margarida Ramalho, who leads the courses on international businesses. So they are partnering with some of the key Portuguese companies, brands that are potential export-led driven brands that have a strong national foothold, but want to internationalize. Companies like Delta, Sumo Compal, and Technimed. And the CEOs will be with us for this seminar, for the launch of this initiative. And what we want to be is a partner of Portuguese companies that have export potential to help them develop their international businesses. Some companies like Anchorage are born global, and they don't need this. Their business model is intrinsically global from the start. But many companies have a strong Portuguese base and can grow through export driven of their products and services. So that platform will do case writing, applied research, and partnerships with companies to help them develop their international business. And we'll launch these on the 30th of March. So please stay with us for all of these seminars. Because of the speakers and topics, they will be in Portuguese language. So sorry for our international audience, but these are a bit more Portuguese focused. But I was very happy to have this English and global oriented seminar today with Diogo, Mónica from Anchorage on crypto banking. Thank you very much, everyone. Great to see more than 240 people in the seminar today. Stay safe. Hopefully we'll deconfine soon and get back to some normalcy. In the meanwhile, stay engaged in Zoom in our knowledge seminars. Thank you very much. All of the best for everyone.
Bye, everybody. Thank you.
Bye-bye.
Thank you.
Thank you.
Thank you, Diogo.
Thank you for having me.